And first time we spoke was January of 2023, where you warned that the trend to de-dollarize was accelerating, especially following the sanctions imposed on Russia. Now, since then, much has happened, including the expansion of the BRICS, something that you said would happen, and member countries formalizing bilateral trade agreements, not using the dollar, but their own currencies, something you also said would happen. You also correctly called that the Saudis would join the BRICS or align with the BRICS. They do kind of have a little bit of a toe still out of the water there, straddling it a bit, but you were correct that they would align with the BRICS. And last time we spoke, you said that the Saudis joining the BRICS would be of huge significance to the petrodollar status and would accelerate de-dollarization, and seems you have been right again on that one.
Bretton Woods II loosely would be when Kissinger, as you mentioned, 50 years ago last week, struck a deal with the Saudi kingdom that, hey, we're going to protect you, provide you munitions, but for that protection, you will, by extension of OPEC, value oil in dollars and then take the excess reserves and recycle them into U.S. treasuries. And it has been that way for, as you mentioned, 50 years. Now, if we take that at face value that this deal was not renewed, we then will follow what Zoltan Pozsar says is Bretton Woods III, where we are right now, a system that would be identified primarily by commodities. And I would add into it transparency. A system that was predicated on opaque debt instruments and promises by a government that is borderline insolvent and viewed, as I told you way back when in 2022, as being hypocritical. And we are viewed that way by much of the Southern Hemisphere. I think the days of that being accepted as an asset, the debt promises of a country that is viewed as hypocritical, those days are coming rapidly to an end.
You need to inspire confidence when you issue a new system, a new currency, and that will be a currency that will be pegged to a commodity like gold, the only other tier 1 reserve asset in the world that the most well-funded traders on the planet continue to buy hand over fist, using the suppression of the Western paper markets to run cover for their acquisition and for real price discovery. And they will meld, I believe, the gold that they hold on their ledger or on their books with some form of a blockchain technology to show the world, to inspire confidence, to inspire veracity and immutability. So yes, I don't know that it's Tether. That seems to be kind of a lightning rod and the center of a lot of question marks. But indeed, I think the new system, whatever that system is, will be a marriage of commodities and blockchain technology. Even the new BRICS currency, we've been told for 3 years by the Russian finance minister, Sergei Glazyev, that it will be a basket, and he's intimated that it will be a basket of 40% local currencies, those currencies involved in the system, and a basket of commodities, 60%, which has to be primarily gold, which is the world's only other tier 1 asset.
The Bank of India bought 24 tons of gold, which is 1.5 times what they purchased in 2023. They bought that in the first 4 months of this year, and they repatriated 100 metric tons. Almost all of their gold now is held in India instead of the Bank of England. They brought it back from the Bank of England, which is otherwise known as the London Metals Exchange, or the LBMA, where they can trade. But when we go back to 2018 and 17, we saw the Bundesbank from Germany, the Bank of Turkey, Hungary, Poland, Austria, the Dutch National Bank, the Czech National Bank, they all brought their gold home from the New York Fed and then went on a massive buying spree. Those banks bought more gold next year as they did in the 60 years previously combined and haven't stopped. And here we are now. The numbers of the central banks buying gold is off the charts. Q1 2024 was the biggest ever, replacing Q1 2023. And what did we just see? Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia just brought all their gold home from the New York Fed, which is the COMEX. And so when we talk about how does this happen, the repatriation and the accumulation of gold is of no coincidence to its reclassification by the most powerful bank in the world as the only other tier 1 reserve asset. So we had this meeting. We've had 2 meetings over the last 2 weeks. There are 200 meetings, BRICS meetings, leading up to the big one in October. The one last week was in Novigrad, where 21,000 people attended from 139 nations, and 80 billion in bilateral deals not using the dollar were settled on the sidelines. 59 nations plan on joining BRICS, we were told, And Putin talked about the new payment system that is being worked on through the new development bank. He also talked about the countries that will be admitted not only will be resource rich, but will have trade logistics and sea routes as a major focus for cooperation. So we go 2 weeks ago, and by the way, the Crown Prince of Saudi Arabia turned down the invitation to the meeting of the G7 that same week, last week. Can't go, he said, but he sent his finance ministers to the meeting in Novigrad. Interesting. We go back 2 weeks ago, and this is where it gets very interesting. Putin gives a speech at the St. Petersburg International Economic Forum. And he says the Bretton Woods monetary system is dead and gone. The current one is based on only the confidence of the US. And they came out and he said that they are indeed working on a new payment infrastructure independent from the Western ability to pressure and sanction. And he had a meeting there with the president of the BRICS New Development Bank, a lady named Dilma Rousseff, where she acknowledged publicly that indeed we have come to an agreement on something called the unit. Now, Sergei Glaziev, the Russian finance minister, told us 3 years ago they will issue a common settlement currency that will be backed by a basket of currencies of the BRICS plus nations and a basket of commodities. Evidently, they realized that a basket of commodities is too hard to control and predict, so they've decided to just use gold, which is what? The only other tier 1 reserve asset as categorized by the Bank of International Settlements, the most powerful bank on the planet. The central bank. And who's been buying all the gold? Oh yeah, it's the central banks. And who's been repatriating all the gold, bringing it home, removing counterparty risk? Oh yeah, that's the central banks. So the agreement was that this new transactional settlement currency will be anchored in 40% gold and 60% BRICS plus settlement currencies. And the next day they had a meeting, Putin and Dilma, the head of the BRICS New Development Bank, and Sergei Glaziev, the architect of all of this. And they came out and said, yes, we've discussed the unit, we agree about it, and we are going to have a special conference in Shanghai in September to deal just with this unit. And to me, when they tell you that 59 countries have already formally said they're going to join the BRICS, that this will be discussed in September, it is a high probability they will bring it up and announce it to the world in October. In an environment where for 40 years, lower and lower interest rates made anyone invest in traditional assets look genius, and all that expansion of credit and cheap money created distortions in asset prices. Just as that massive amount of credit and cheap money did that, what happens when banks start to fail and the contraction of credit is brought in hard, where you see the 4th largest building in St. Louis, the former One AT&T Center, 44 stories tall, was sold for $205 million in 2006, just sold for $3.7 million. $3.7 million. You too can own the 4th largest building in St. Louis.
That's happening all over the country.
Yes. And so as that starts to hurt the banks and the banks start to collapse and rates go higher, the contraction of credit. Think about how much credit is used to bring a loaf of bread to the store. The farmer who has a combine and diesel fuel and seeds is on credit. When he harvests his field at the end of the growing season and gives it to the trucking company, the wheat, who brings, they're on credit for the trucks and the diesel fuel. They bring it to the flour mill, who's on credit, who refines it and gives it back to the trucking company, who's on credit, who brings it to the baker to make the bread, who's on credit, gives it back to the trucking company, who's on credit, who gives it to the grocery store, who uses credit. Now you got a loaf of bread in the grocery store on the shelf, but how many pieces of credit touched that? You start to rein in credit, the whole thing collapses. So I think you will see a credit contraction that will freak people out to levels that they cannot believe. The funny thing is, most people in this country, even the well-read ones, don't even know that bail-in legislation was signed into law in the Dodd-Frank Act. Have no idea what that means, and I suggest you all read it. Bail-ins, Dodd-Frank law, and then ask yourself what would happen when one of these big banks collapses. It's the beginning of a daisy chain where people will run to commodities, and who will already be sitting in them comfortably? Oh yeah, the most knowledgeable traders on the planet, the central banks who write the playbook. The only thing that I can tell you out of 34 years in finance is that markets go higher to the upside than anyone ever thinks possible and fall to the downside more than anyone thinks possible. I think gold will outperform just about everyone's expectations because it will be the cornerstone to inspiring trust in whatever new system arises. And I think rates ultimately go much higher. How the heck do we pay for all of this stuff in this environment? We don't. And you do it by monetization of assets, or the Fed being the buyer of last resort and being the only one silly enough to purchase these treasuries. So inflation's not going down. And even if we believe they're nonsense, we're still, over halfway away from where they want to be. They want to be at 2 or at 3.5. Well, they're a long ways away from that. So why lower? Why would anyone want to hold treasuries? You look at gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year treasury. And we've proven to the world that we don't like what you're doing. We'll take your treasuries and might even give them to the country, or buy weapons with the proceeds and give to the country you're in a war with. That's a very tough thing to come back from. So I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the treasury. Read Zoltan Pozsar. This is Bretton Woods III, all about commodities. And it's also a country that has obligations that will be very difficult to meet just from tax revenue. So where are your options, I mean, if I had one trade to make, I'd buy gold. It's the only other tier 1 reserve asset. And the central banks are buying it at a level the world's never seen. But at the same breath, I will tell you that silver is the investment of a generation. And I think you go heavier into silver with the intention of trading it into gold when the ratio, which is historically distorted and out of whack, the ratio between the two, corrects. And the way that the law of averages always makes these anomalies, brings them back to, regresses them to the mean. Silver is wholly undervalued. And you're right, the plurality in demand is very unusual in a commodity that has military applications, has monetary applications, has industrial applications, many industrial applications in a green and digital world. It offers upside potential that I think people don't get. It's decreasing its footprint in nature. For 5,000 years was 16-1. Let's call that the God's ratio, which is now 7-1, because it's found in a form called epithermal, like your skin is epidermis, it's near the surface. Big deposits were found long ago. And man's ratio for 150 years, probably because of gold's role as money, has averaged about 42-1. Well, it's now almost 80-1. And so man's ratio is distorted through the rehypothecation of silver on the COMEX and the LBMA to distort its real value, to allow the military industrial complex to stockpile it and to fight wars and build munitions. But in all these years, no one ever stood for delivery. Now they are. And to be short naked the way that they are will bring down some of the biggest commercial banks in the world if it continues.